This is a reality for many people, but luckily for you, you found this channel, so now I will teach you how to escape.
Reality can be whatever I want.
Just don't work. Anyways, thank you for watching this video. Make sure you guys like, comment, and subscribe. No, I'm just kidding. In all seriousness, if you don't work, how are you gonna pay the bills? Buy the things you need, want, and deserve. Go on lavish holidays.
The bill comes due. Always.
To acquire all the finer things in life, you don't need to work. All you need is money. When it comes to making money, you could work a job to earn that sweet, sweet cash. Or you could put your money to work to earn you more money. This simple concept is what we call investing. Investing is when your money earns you money. There are many ways to invest. Some of the most popular things to invest in include stocks, bonds, real estate, crypto, precious minerals, yourself. Investing in yourself, which is a thing, but all have the same purpose. People place their money in these things we call assets with the hope these assets will be worth more in the future. And when you remove your need to work from the equation, we call this passive income. It is still income, but unlike active income where you have to actively work, passive income is all about generating income without having to work. Investing is the only legal way for you to accomplish this. When it comes to the world of personal finance, there are two things we label something depending on what it does to our wallets. If something puts money into our wallet, we call it an asset, and if something removes money from our wallet, we call it a liability. In this video, we will go over the most popular assets that people invest in. Let's start with my favorite, stocks. A stock is a share of a company. Big corporations like Coca-Cola or Apple don't just have one owner, but instead millions of them, who all own a percentage of the company. They could just own as little as one share or as much as millions of shares. But if you buy a share, you do become one of the owners of that company. There are two main ways a stock can make you money: capital appreciation and dividends. Firstly, you can buy a share, then if that company does well in the future, their shares will be worth more, so you can now sell it at a higher price. For example, let's say you buy a share of Pepsi for $100. Then Pepsi released their new lime-flavored Pepsi product and did very well, so they made bank from it. Then Pepsi stock goes up from all the money they've made, and you sell your share back for $200. You have just made a $100 profit. The second way you can make money with a stock is through dividend payments. A dividend is when a company pays all their shareholders just for owning the share. Usually a company pays dividends, then the dividend payments are made every quarter. This is not always the case, but it's generally what happens. So let's go back to that share of Pepsi. As we can see, they paid $4.83 per share during the calendar year of 2023. So for every share of Pepsi you own, you will have made $4.83. So if you owned 100 shares of Pepsi, you would have made $483. Bonds are loans you give to companies or governments that they have to pay back. If you buy a $100 US Treasury bill, you lend the US government $100. Now that they will have to pay you back later with interest. So if they pay back $10 every month for a year, at the end of the year, you will have made $120 or a $20 profit. These are not realistic numbers, but they do get the message across. Unlike a stock which may go down in value, bonds are loans that the other party is legally obligated to pay back, which makes it a safer investment. The safest of these bonds are government bonds, which are bonds used to fund the activity of governments. If a government was ever not able to make their payments on these bonds, they can always charge their citizens more taxes to fund the payment of these bonds. You can buy US Treasury bills directly from the government using the link in the description below. You can also invest in corporate bonds, which pay more than Treasury bills, but because they're from corporations that have a chance to go bankrupt, they're more riskier. Lastly, you can buy junk bonds, which are the highest paying bonds, but very risky and the high chance that the company will go bankrupt. Usually these junk bonds are issued by small startups or governments that aren't the most stable. One of the oldest forms of investments, real estate includes single-family homes, multifamily homes, townhomes, condos, land, apartments, office spaces. When you own property, you can often make more money off that property in the same way you can make money off stocks. You can either buy the home and then sell it back for a higher price. Let's say you buy a home for $90,000 and the home needed some new carpet, some electrical work done, and let's say you renovate it for $10,000. Then you would have spent $100,000 in total for that home. Then you can sell it to someone for $120,000 and make yourself a $20,000 profit. Or the second way to make money off real estate is to buy a home, then lease it out to tenants. The tenants pay you rent, and if done properly, the rent can cover the mortgage and have a little bit left over for profit. Unlike stocks, real estate often require you to put effort in. With stocks and even bonds, you can just purchase it with no real issue. While with real estate, you have to search for property, you have to meet with people, bankers, realtors, agents. You have to write up offers, crunch numbers, and do so much more. So it isn't as passive as the other assets we've discussed, but it's still one of the most popular things you can invest in. Some materials are accepted by society to be valuable. These materials mainly consist of precious minerals like gold or silver. For thousands of years, humans have considered these minerals valuable, so much so that they would venture out to sea on long, grueling journeys, go to war with other tribes just to get their hands on more of these precious minerals. We don't venture out to sea or go to war with other tribes anymore, but we do still find these materials very valuable, which is why you can actually invest in it in yourself. Now, when it comes to investing in these precious minerals like gold, you can either own physical gold that you could touch and taste, not that you should be eating gold, or you can own a fund that invests in gold like SGOL. A relatively new asset class. You have to be careful when investing into cryptocurrencies just because we know very little about it right now. But cryptocurrency is another form of currency which is 100% digital. But cryptocurrency is another form of currency which is less stable than precious minerals, but offers higher returns. Cryptocurrency is 100% digital. It literally is just a transfer of digital assets. Some of the more famous cryptocurrencies you may be familiar with include Bitcoin, Dogecoin, Ethereum. Similar to precious minerals, these only have value because society deems them to have value. But unlike precious minerals, crypto is volatile and relatively new, so there is a worrying amount of probability that crypto is just a trend. This is super corny, but that doesn't make it untrue. There are many ways you can invest in yourself. You can pursue higher education for a better career, which will pay you more in the future. You can work out or meditate to clear your mind so that you can work better for longer. You can learn a new skill or maybe get a side hustle, or maybe even start your own business. But the easiest and my favorite way to invest in yourself is to watch this YouTube channel every day before you go to work, where you will learn everything you need to know about personal finance and investing. There are many more types of assets and even sub-assets that we didn't get to talk about in this video, like mutual funds, certificate of deposits, NFTs, etc. The purpose of this video is just to go over the basics of investing and the most popular asset classes. But in the future, I will release more videos on the many different things you can invest in. I'll even go deeper into all of the things we went over today so you can learn all the nooks and crannies of it. So make sure you like, comment, subscribe, and hit the notification bell so you can stay notified when those videos drop.